What is the S&P 500? The S&P 500 is the Standard & Poor's 500 stock market index and counts as one of the most common and followed equity indices worldwide. To explain it better, we need to understand what a stock market index is. There are companies that are listed on the public stock market like Amazon, Tesla or Apple. And there are companies that are not traded publicly on the stock market. We call them private companies like Koch Industries, IKEA or Lego. The share price of a company, for example Tesla, expresses the market value of a company listed on a stock exchange. While on the other hand, an index represents a whole market. That's why we call them market index. A market consists of several companies. Markets can be different one in another and can be subdivided in different categories, like geographic markets like Europe, America or Asia, or different industries like pharmacy, technology or finance. So when we speak about the US market, we often use the S&P 500, which includes 500 of the largest companies listed on the exchanges in the United States. Across all industry sectors like companies from the technology sector, for example Qualcomm, Netflix or Adobe, or from pharmacy like Pfizer or Johnson & Johnson. All those 500 companies together form the indicator. But the companies have different weightings. For example, Apple with 7.1% a higher weighting than United Health Group Incorporation with a weighting of 1.3%. The companies of the S&P 500 are selected by a committee. The committee selects the components' merits on a basis of 8 main criteria: market capitalization, liquidity, domicile, public float, global industry classification standard and representation of the industries in the economy of the United States, financial viability, length of time publicly traded, and stock exchange. Important to mention here is that only companies from the United States are listed on the index. As I already said, there are different indicators for different markets but also for different quantities. The DJOW or DOW tracks just 30 companies, while the Nasdaq composite index tracks more than 3,000 stocks. The S&P 500 had a growth rate from the 1st January 1901 to December 2000 of 118% and has an average annual return of 3%. The index gives you a view to a broad swath of the economy and represents now a quarter of the entire US American stock market capitalization. But it is also important to know that it is heavily weighted towards specific market capitalizations, sectors and industries, which is important to know if you want to build your own portfolio. So how can you invest in the S&P 500? There are two different ways, through ETFs and investment funds. If you want to inform yourself about those topics, check out our videos that you can find in the video description. Plus, you can subscribe for weekly finance videos.